Okay. Hello and welcome back to the channel. Today is on the topic of fine wine investing. I'm very pleased to have the man to my left, David Jackson of Amphora Portfolio Management based in London. For those who have been following my channel, it's a little bit of a new format. It's usually just me talking, but it's a very special occasion. I've got a guest over. I heard you actually flew from London specifically for this YouTube video.
Exactly. Honored to be the first guest.
And for those who are new to the channel, just by way of a brief introduction, my name is Noel Grandison. I work for SVN Capital as an investment advisor. We're headquartered here in Dubai, but we work with high net worth investors globally. And what really sets us apart from the market is we design bespoke and innovative portfolios, and it has very creative but safe investments within those portfolios. And who else better than to introduce David Jackson, who is our wine portfolio manager of choice and an absolute titan in the industry as well. I guess a good place to start, David, is could you just, for our viewers, provide a brief introduction to who Amphora Portfolio Management is?
Yeah, of course. So Amphora is a fine wine investment advisory and portfolio manager.
Yeah.
The 30-second backstory is that it was born from a bunch of guys that were friends of mine when we were stockbrokers and investment advisors working in the City of London. I was a private client stockbroker at that time.
Yeah.
Now, we were all a bunch of guys being probably paid a bit more than we deserved, drinking all these lovely wines. Yeah. And at that time, for me, a love of wine became a love of fine wine. And we were drinking these wines together. And then a really interesting thing happened. And that's that the merchants, the traditional merchants that we were buying these wines from, started calling us up and saying, "Oh, guys, can we buy it back?
Right.
And we'll give you more money than you paid for it in the first place."
Yes.
So straight away I thought, there's a secondary marketplace here.
Mm-hmm.
And the secondary, I thought, hang on a second. This looks and smells a little bit like an investment. And so for a young-ish man at that time working in the markets, to say my interest was piqued is an understatement. I became passionate about really understanding the wine market, and I guess it was with a vague notion to set up a business if and when the time came right. So that's the backdrop to where Amphora was spawned.
Perfect. And I guess a good place to start is, could you just distinguish for our viewers what the difference is between just ordinary wine and fine wine, and why it's important to make that distinguishment when building a portfolio?
Yeah. Okay. No, I will. And this is very important actually, because when one's investing in wine, it will always be in fine wine, and not just fine wine, but ultra fine wine, because the wines that go into portfolios will be naturally the rarest and the most sought after and the most desirable in the world. More important than that, they are the ones that enjoy that secondary market, so the ones that can trade. Now, whilst all of those facets might collectively amount to what we consider to be a fine wine, there is actually a very specific definition of a fine wine.
Yeah.
And that's a wine which improves with age in the bottle. Yeah. Like most wine, 99% of wine goes into the bottle. It's absolutely its optimum drinking time. You open it within a year or two, and that's when you want to be drinking it.
Yeah.
But with fine wines, there's an incubation period. And with ultra fine wines, that incubation period might be 10 years. It might well be 20 years.
Okay. And then just to clarify the difference between fine wine and ultra fine wine.
So I think here, what we're falling into here is, in many respects, a price bracket.
Okay.
So what happens with fine wine is that the methods of production and the labor and the time that it takes to produce these wines is far greater. Yeah. And then you get this sort of exponential curve in terms of price and desirability at the end. And this is not really dictated so much by quality. This is dictated much more by pedigree, history, scarcity, certainly.
Yeah.
A lot of these wines are made in preciously small quantities.
Yeah.
And that means that they command much higher price points.
Yeah.
And it's those ones that you'll find that fall into the tradable category.
Okay, perfect. And then what really sets you apart from the rest of the market is, I believe, your quantitative analysis. Sorry for diving in so technical so early into this video and this interview, but I really, really like how you really treat it like a stock market. The level of analysis you apply when it comes to adding in the right wines, taking the wrong ones out of the portfolio in terms of balancing them as well. So could you just brief the audience a little bit on what Amphora do as far as the quantitative analysis?
Yeah, you bet, because it is a point of pride for the business. So when we were considering establishing Amphora, myself and the associates that I started with, we sort of sat around and we sort of agonized about whether we could bring anything to the party. And my observation at that time, what was happening is that the investment scene, broadly speaking, was being dominated and managed by the traditional merchants. For good guys, know everything you could ever need to know about wine, but don't necessarily understand the investment process. So what I found was happening constantly, all the time, is that the advice that people were being given was either a little bit my finger in the air, very anecdotal, and perhaps I might even go as far to say a bit self-serving, because merchants are there to sell their inventory.
Right.
So it might just so happen the best investment today happens to be the thing that they want to sell.
So almost like stockbrokers back in the 80s.
Yeah, exactly like that.
Yeah.
So we looked at that and we said, well, okay, if we're going to start a business, we've got to bring something to the party.
Yeah.
And we don't know more about wine than the merchants know. It's going to take us years to know as much as they know. And that kind of wasn't the point. So we said, is there anything within our combined expertise, this knowledge that we can create kind of almost an overlay of a stock marking model? And we agonized about this, because if you go to the bare bones of this is a drink. There's no fundamentals here, right? There's no PE ratios, no cash flowing off. There's none of the stuff that you can normally hang your coat on to start your analysis.
Yeah.
And so we really struggled for the longest time. And eventually what we said to them, we said, well, look, if we could understand in great detail how and why different wines are priced, why is a case of Petrus $40,000 and a case of Du Hoc Milan is $400? Qualitatively, they're not a million miles apart. Yet price-wise, they don't even resemble each other.
Yeah, because that's such a big difference between the two.
Yeah.
You're talking about...
And which one's the best investment?
Right.
The price tells you nothing.
Yeah.
So we started to drill down exactly what, how and why wines are priced and what the determinants are, which will influence the price of a wine.
Yeah.
And we broke those down and we said, okay, well, so we now understand what's influencing these prices.
Yeah.
We then broke it down to weight them according to their influence and built them into an algorithm.
Yeah.
And the algorithm was like a bit of gold dust at that time. Nobody had, I mean, you were very kind to call it a quant. I called it a quant. It's a bit of a crude tool in terms of what you might see in the markets.
Yeah.
But I think at the time that we were doing this, in terms of fine wine, it really was a revolution. Nobody else was doing this at that time.
Yeah.
And it enabled us to level the playing field and look at quite literally thousands of different wines.
Yeah.
And the algorithm would say, all things being equal, we know what they should be priced at.
Yeah.
And it would show us anomalous pricing. So we could hone in on stuff that was too cheap and the stuff that was too expensive, right? And so we built this thing and we said, okay, does it work? So we started back testing it, and the outperformance we were getting, depending on what rules we ran, was extraordinary. Sometimes it was 60 to 80% outperformance of the market in index terms.
Over what time?
Well, so we spent months and months back testing it. So there's no sort of one moment in time.
Yeah.
But what we would do is we would say, okay, so if an investor bought this parcel of wine at X, and we just use the algorithm to say which ones were priced most competitively compared to their peers, just to let those onto the portfolio, compare that to what would happen with the components of an index. There's a very important index in our world, the LiveX 100, and tracks a bundle of the 100 most frequently traded wines, and we would benchmark it against the performance of that index, and that's where we were getting this outperformance, and it's that gave us the confidence to start the business, because we recognized at that point that we could bring someone to the party, we could help people just do it so much more efficiently and profitably.
And then a bit of a difficult question, but do you still think you've got the edge on the market? Because I noticed that you mentioned that you were the first one to do it. How many more have started to use that level of analysis?
Far fewer than I would have anticipated. I would argue, I argued then and I would argue now that if someone's going to advise on wine investment, they need an arbiter of relative value. If they haven't got that, then they're doing what the merchants were doing way back when, and they're sticking a wet finger in the air. There are a lot more analysis tools out there. There's, the wine market is it's growing up at a rate of knots, and there are trade platforms that provide analysis tools to folks. But I'm still so few, even companies that would, I guess, the banner across the door would say specialist fine wine investment advisory. They're still not using them. We put the blueprint for it. We're not secretive about how it works. Like, here's how to do it. We've shown the world how to do it, and a lot of the world does not do it. I don't understand what they're doing.
Right. So we've got the LiveX 100, which for me is very similar to the S&P 500, where you've got correct me if I'm wrong here, but you've got the top 100 wines typical in the market. And then the S&P 500 is the top 500 companies within the US. If you're an investor, you're usually better off just buying the index.
Yeah.
Is it the same with the wine market?
Yeah. So the index is pretty well respected. It's quoted on Bloomberg and it's quoted on Reuters.
Yeah.
There was one company that allowed you to buy the index at one point, but I think that the problem is this: the wine market is really teeny tiny.
Mm-hmm.
So we think in terms of those, again, there's tradable wines. You're talking less than $10 billion a year in terms of trading.
Yeah.
Now, whilst that sounds like a big number in isolation, it's a week's worth of just DOM trading in London alone. So it's a really small marketplace. So for one of the big players to run books on the index is, I don't think that one worked out very well. We made a decision. So one of the agonizations in setting up the business is, should we be a fund? And what we settled on is that because of the nature of the market, because it is small, because it's quite lovely and touchy-feely, that it was a much better idea to run portfolios with physical bottles. So all of our clients have portfolios of physical bottles. We babysit them for them in our bonded warehouse.
So it's almost like owning a property and it's getting the title.
Yeah, absolutely. It's a physical asset. So it's something that people can touch and feel they can drink the wines if they want to, although of course that was how we set up.
Drinking the profits.
Well, I mean, a lot of clients do that. They buy more wine than they intend to sell, and some of it they drink. And there's no greater feeling than drinking fancy wine when it comes at a discount because you made a profit.
Yeah, and then that brings us nicely onto the provenance as well. So am I right in saying it's all stored in London, and what's the significance of that?
Oh, honestly, this is so crucial. So one of the golden rules for wine investment is that you need to store your wines, your bottles, in a bonded warehouse, preferably in London, only because London's well respected on the international circuit, but certainly in bond. Now, there are various reasons for this. And they're so important, I can't understate this. So if wine's stored in a bonded warehouse, it's been blanded and notarized. We know where it came from. We know the history. So we can guarantee authenticity.
Yeah.
We can guarantee provenance.
Yeah.
We know it's been stored in the correct fashion.
Yeah.
Now, for us as portfolio managers, that means when the time comes to sell the bottles, we can sell them quickly and easily on the international marketplace.
Yeah.
The fastest way to mess up your wine investment is to take the bottles home, because nobody knows what you did with them. And nobody even knows if they're the same bottles.
And it's quite easy to mess up in terms of the storage as well, if I'm not mistaken.
Well, yeah. I mean, even if, we have a lot of people in South that was wonderful air-conditioned cellar underneath my house. And we said, well, that's fine. Your bottle's going to be beautiful when you drink them. But the next person that buys them does not know that you had that facility. Whereas if they were in a bonded warehouse, they do know. Also, the bonded warehouse means that you keep the international marketplace open. Because if you take the wine out of bond, if you take it out in the UK or wherever you are, then you're limited to that marketplace.
And I can imagine if it's stored within the bonded warehouses, it makes the asset itself, forgive the pun, a little bit more liquid, because it's simply a transfer of papers.
Oh, for sure. Yeah, absolutely. Quite often these wines won't even move when they're resold. It's just that names and numbers will change on a page.
Yeah, perfect. And then just in market terms, what's the historic performance been of wine up maybe over the last 10, 20 years?
Okay, so I guess 20 years is probably the right time frame to look at, because around about 20 years ago was the mobilization of China, which is something we should talk about.
Yeah.
That's when the market created, these sort of big peaks and troughs. We had some great bull runs. We had some volatility. I love volatility because, of course, that's where we find the opportunity.
Why do you talk about that? How long has the market existed in its entirety? How far does it go back?
Oh man, I mean, we're talking hundreds and hundreds of years. This is if you want to go back in time, this legend will tell you that the landed gentry bought twice as much as they needed, waited for it to double in value, and then they sold the other half onto the marketplace, and then all us poor people bought that at double the price.
Okay.
But I think the modern marketplace, your 20-year view is probably about the right view to look at. The market in index terms is somewhere over 9%, but under 10%.
Per annum?
Yeah.
Yeah.
Now that's taken into account. There've been two major corrections. One in 2011 when Xi Jinping clamped down on corruption in China, and before that, if you wanted to lubricate a business deal, you send up the case to defeat. So that caused a big correction. The last one we're at the tail end of that. We've had one for 2 years. We really have an ambition to run the portfolios in double-digit returns.
Yeah.
Now, the challenge we have, of course, that there's no homogeneous Amphora performance. Each portfolio is bespoke.
Yeah.
It's built on a different agenda.
Yeah.
But with those clients that interact with us, where we have an ongoing dialogue, the switching, reshaping, make sure the portfolio is in good shape, then we can hand on heart look to achieve those double digit.
Yeah. So just in our industry, typically what we find is if somebody invests more, it's easier to manage the risk, mitigate the risk, because not only do they get access to the higher end, let's say for the stock market, they get to buy blue chip stocks, but they also get the opportunity to diversify, and that also applies to alternative investments as well. Do you see the same in wine? If somebody invests a little bit more, and then if so, what would you say is the minimum threshold to build a robust wine portfolio?
So this again is a very important point, because one of the things that really attracted me to the marketplace was the depth and breadth of the opportunities. Yeah. So again, there's no homogeneous Amphora price, there's no homogeneous wine price. So you're not diversifying into it as like oil or gold or whatever else it may be.
Yeah.
There are hundreds, thousands of different opportunities.
Yeah.
So the opportunities for diversification within the asset class, I think it's greater than any other physical asset class that I can think of.
Wow.
And of course, that's how we manage risk.
Yeah.
And we're so keen. So often you get people that say, well, I'd like to dip my toe in the water and buy a single case of wine. And we say, that's a punt.
Yeah.
Don't do it. Take advantage of the benefits. Yeah. So to answer your question, investable cases will tend to cost from about £1,000 in practical terms.
Yeah.
Top Bordeaux's, the first growth Bordeaux's, will be 5, 6, 7, 8 times that. And there are some trophy ones which can be at greater levels than that. So what that means is that to get someone started, we often do it for sort of £20,000, perhaps £30,000, that sort of level.
Yeah.
But life just gets so much better when it's £50,000 and £100,000 for all the reasons that you cite. A case of 2009, defeat Rothschild for 12,000 quid, can't go in a £20,000 portfolio because it polarizes it. So the bigger the portfolio, the more fun we can have, the better we can manage risk and the more damage.
Yeah. So it's quite good to cover regions as well. So how important is it to select the correct regions when building a portfolio?
So regions, people often get a bit confused when I'm talking to them about wine, because I switch between the word regions and sectors.
Yeah.
Because in my world, a geographical region is a sector, and the same that you find sectors in the stock market. And the different sectors, regions in fine wine move at different rates and at different times. And what you will find is that if perhaps Bordeaux is having a bit of a hard time and it's not going very well, it might be the Burgundy's having a great time.
Yeah.
And if Burgundy's not doing so well, it might be the Tuscany's having a great time, et cetera, et cetera, et cetera. And so that's when I mentioned about the ongoing dialogue with the clients. Yeah. That's that we want the portfolios to represent the market attitude at any given moment in time. Mm-hmm. And so we make sure that the weighting in the portfolios reflects what's taking place in the marketplace. So it is incredibly important. And you'll sometimes find people that make sort of fairly binary choices, buy a load of wine and sit on it and wait for it forever. And they've got, a load of stuff that didn't perform. And they say, oh, wine investment hasn't been very good. And then another guy had a load of super Tuscans that trebled in value, and they're saying it's the best thing in the world. And we're somewhere in the making sure that people are getting, wringing the best out of it to the best of our abilities.
Yeah. I think we've I tried to keep my my YouTube videos distinct.
Very wise.
But I think we've covered everything. So really the headline figures for an investor is really look at around at least 25 to 50,000 if you're looking to build a serious wine portfolio. Historic performance has been in the region of 9 to 10, and for aim to exceed those market returns typically due to the algorithm, and also your qualitative test taste, I believe you overlay it with. And are there any other pertinent points, if I was to summarize this video, that you'd like to mention?
So the other thing that's as important as regions is getting the correct vintages.
Yeah.
This again is one of the messages that I'm really keen to story. The lazy advice is buy the best vintages, buy the best years, all that sort of stuff. That's not necessarily the best investment because more often than not, that's going to be built into the price.
Yeah.
So again, this is the thing that the algorithm helps with. It tells us what the differential is between the slightly less loved vintages and the great ones. And if the discount is sufficient, you will absolutely find that the off vintage wine is the better investment than the finer vintage wine. But as it starts to catch up with the finer one, then of course people say, hang on a second, I can have the little bit better one for a little bit more money. And you find that the demand moves into that. So you get this kind of push and pulling effect on vintages. So it's not just, you have to be careful sectorially on how you populate the portfolio. Yeah. You have to be really careful with those vintages.
So you're capitalizing on the inefficiency of the market. And then how quickly does the market move? So how quickly does the...
Yeah, the inefficiency of the market, right. So that is an interesting point. So when I set this business up, I thought, this is going to be fantastic. This market is going to be so inefficient.
Yeah.
It's not. It's much more efficient than I hoped it would be.
Yeah.
And that's because this is for another podcast because we can't go into this. But the secret insight is that the wine market operates on a market maker system. It doesn't even know it does it, but it does, I can assure you. And it means that the pricing is really, really efficient. So we have certain amounts of efficiency, but there's just enough inefficiency for us to find those opportunities.
Oh, brilliant. Okay, thanks, David. It's been very comprehensive. And just a final bonus question. Let's say if I didn't want to build a bespoke portfolio, but I want to grab as much value while I've got you here. What wines do you suggest just keeping in your wine cooler or your wine?
Oh, what for drinking wine?
Yeah, because we're not going to be, it won't be from an investor perspective.
You got to stock up on 2009s and 2010s, right? A brief history of time is that those are super duper vintage, some of the best wines of the last 100 years.
Yeah.
They came to market in a ferocious time of market activity just before the China-led crash. They came down. They're now trading at a tiny premium to other wines that are a little bit behind those. And man, some of those wines are wonderful. You don't have to go for the crazy stuff. You know, there are wines, I mean, you got to spend a bit, but there are wines from 2009 and 2010 for 30, 35 pounds, and the quality is through the roof. So I'd recommend you get 2009.
Okay, so £35, you're looking at probably $40, $45 for anybody who might be watching.
Brand Cantonac, 2009. There you go. There's your...
Okay, brilliant. That's it from us, I believe.
Good.
Anything else to add?
All good from me.
Thanks, David. It's been very, very comprehensive. And thanks for watching the video. Feel free to like and subscribe if you found this video useful. And I will also add the contact details of me on the screen. So if you'd like to get in touch with David and I, then feel free to send me a WhatsApp or email me. And thanks for watching.
Cheers.
Cheers.